What's going on? What's going on, y'all? Happy Sunday. It's been a minute since we went live. Happy Sunday to everybody. So what we're gonna do, we're gonna wait for a few more people to join before we get started. But today we're gonna do some we're gonna actually do some teaching today, y'all. So I'm excited about today, and then I'll also give y'all an update as to our streaming platforms and things like that, because we're gonna start streaming on more than just YouTube. Also, if you guys have any pairs that you like to see me mark up, please put them in the chat and I'll make sure I get to those first. But the first thing that I'm gonna do, like I said, I'm gonna actually do some teaching today, because I have a few users and a few people that have joined the crew. And what I want to do is I want to make sure that I go over some basic market structure and things like that. And hopefully some who are some of our seasoned members and things like that, we possibly can teach something that you guys don't know. And so I know that there are some traders out there that still kind of get confused on just basic market structure. And so we're going to go over market structure and how the different times correlate with each other, and hopefully that can help anybody. And so basically the goal of this particular channel was to help anybody become financially free, and to help people, most of all, how to trade Forex, how to understand Forex, and how this can be a tool to help somebody financially. So like I said, we'll get started in about 2 or 3 more minutes, kind of let a few more people join, and then we'll go ahead and get started. Like I said, if y'all want to put some pairs or something in the chat, or if y'all have any type of questions that y'all want to put in the chat, go ahead, put them in the chat, and I'll make sure I get to your questions. If you have some pairs you want to see marked up, I'll get to them. If you got some questions about Forex in general as a whole, put them in there and I'll get to them. And also, man, like and subscribe to this channel, man. I greatly appreciate it. But also go ahead and respond in the chat. Let me know who all up in here. All right, before we get started. Like I was saying, I haven't streamed in a while. Been busy with the family. Y'all know we just came out of Thanksgiving. We're going into Christmas, so for my kids, it's an exciting time. Pretty much for the whole household. I mean, we like Christmas, and so the kids, they extra excited right now. So we've been quite busy, but we're about to start focusing more on the channel. We're about to start adding more content to make sure that we can help any and everybody that comes across our platform. And like I said, we're gonna get started in another couple of minutes. And like I said, if there's anybody in the chat, just comment in the chat, y'all. Let me know where y'all from or who are joining on today. Let me share this on Facebook right quick, let people know that we live. And then we're gonna go ahead and get started. All right, y'all, we're gonna go ahead and get started. Also, for those who are joining the stream and y'all want to connect with us on our chat, I'll go ahead and put that in the I'll put our Discord link in the official chat right quick. 1 second. For those who want to connect with us and, you know, get live updates, market analysis, all that kind of thing. Y'all want to connect with me. If y'all want to do, hold on 1 second. If y'all want to get any one-on-one sessions, any of that kind of thing, hit me up. I can definitely be accessed within the chat, and I'll be happy to help. All right, that's our Discord link right there. Hey y'all, let's go ahead and get started. So y'all know we always start off with a word of prayer. Heavenly Father, I want to thank you for this day. I want to thank you for life, health, and strength, Lord. I pray that this channel will continue to be a blessing to all who comes across it. I pray that whoever learns this particular tool, whether it's from me or from any other Forex trader, that it will help them become financially free. Lord, I pray that we remain humble, and I just want to thank and pray for everyone's family who's on this call and on this channel. And Lord, we ask these things in Jesus' name we pray. Amen. All right, y'all, let's get into it. So usually how I'm gonna start today's channel off, I usually start off with fundamental analysis. So for those who are new, there's two different type of analysis when you're dealing with Forex. It's fundamental and it's technical. So the fundamental analysis is the news, because news impact how the markets move and things like that. And so what we usually do, we usually go to forexfactory.com. And from there, we can actually see what different pairs or different currencies and how they affect the different pairs that we kind of come across. So for example, as you can see, we got AUD, which is the Australian dollar. We got the euro and things like that. And so every day, if you click on the calendar section, it'll show you different days and different times as to when the news will affect that particular pair. Okay. And so when I say affect that pair, you might see massive spikes, within a pair. It might spike up or it might spike down really, really fast or really, really rapidly during that time. And that usually happens when you have like red folders. Like right now we have orange and yellow folders. So if we scroll down more so in the week, as you can see on Monday, we have a red folder on USD, which is an ISM service PMI. I don't really know what this one is, so I have to read up on it a little bit. But usually what I like to do is look at which days and which times will actually have an impact on the pairs that I trade. So for myself, I trade a lot of USD pairs. So I know if I'm in a trade or I'm trading USD tomorrow, I can expect that there'll be some action at 9 o'clock in the morning. Okay. So if we scroll on down, we can see the Australian dollar has some action at 9:30 p.m. And so for those who trade gold, Australian dollar is a heavy trader or importer of gold. So gold might have some implications too at 9:30 tomorrow night. Okay. And then on Tuesday, you can see that we have some action on AUD again around 6:30. We got the GDP Q and Q. I don't really know what this is. So actually, let's take a look at that. So basically, it's the broadest measure of economic activity and the primary gauge of the economy's health. So it's going to be pretty much giving the economy health on the AUD. And usually those effects are good for that currency. So we'll see exactly what impacts it'll actually do for the AUD on Tuesday. So moving into Wednesday, we can see going into the New York session, we have Canadian dollar that's going to pop off probably about 9 a.m. Going into Thursday, we do have some orange folders on the euro, USD, chef, and CAD that morning. So just because these are not red, let's not necessarily just pass off on the orange folders, because there still might be some movement as well within this time frame. So I'm gonna probably be most concerned with CAD, USD, and euro, because I trade those a lot. I trade chef sometimes as well. So all four of these will probably impact the pairs that I trade. All right, and then closing the week out, as we can see on Friday, we got major news on USD popping off at 7:30. So between 7:30 and 9 o'clock, we're going to see some action on the US dollar. So those who are trading that, just be mindful, and you'll see it pop off. Just be mindful of what you trade on that particular day. All right. So now let's go ahead and get into some pairs right quick. So one of the things that I wanted to do a little different is I wanted to kind of go over a basic market structure and how to find market structure to not get confused on which direction the market is going. So when you look at this particular pair, hold on, you know what? I'm gonna actually go to AUD USD. I'm gonna go to the Australian dollar, AUD USD. The Australian versus the US dollar. Man, what is going on? AUD USD. There we go. All right. So for those that actually is looking at this pair, one of the things that we can notice is from this point all the way down, we can see that the market is going in a downtrend. And what I mean by that is you can see, if I throw a trend on this, you can see that the market is actually declining. You can see as the market is coming down, it's kind of in a decline and things like that. So when we have market structure that goes down, we call that bearish. Now, one of the things I want you to understand is for healthy market structure, let me go ahead and hide this right quick. For healthy market structure, we have peaks and valleys. We have lower highs and lower lows when we're going low. So we have lower lows and lower highs. So this is considered as healthy market structure. And when we're looking at that, these points up here will be our lower highs. This is a lower high here. This is a lower high here. And on the bottom, we have what are called lower lows, okay? Lower low here, lower low here. And I know for some who already know about lower highs and lower lows or market structure, I promise you we won't be on this long, but I just want to make sure that I'm going over this for a lot of our new users and things like that, because market structure is the basics to pretty much everything that we do. So getting back to what we're talking about, when you're looking at a bearish trend, when the market is going down, this is considered as bearish. So a bearish market is actually going down. And so when we see this and you have these lower lows and lower highs, when it's going in that direction, we do not expect price to come back and break through this area here, this last lower high, unless we have a break of structure and the market is changing character. What I mean by that, the market is going to change from a bearish market to a bullish market. And so when we look at a bullish market would look like so. So instead of the market going in decline, it's in the incline. And from there, that's what we get what are called higher highs and then we also have what are called higher lows. So when the market, I'm gonna put a line, I'm gonna put a vertical line here, that way we can understand or see the separation between the two. So we have a bullish market and we have a bearish market. And so when you look at this, in a bearish market, we have a decline. In a bullish market, we have an incline. Now, when I was saying, in order for the market to change, we have to have what is called a break of structure, okay? And so let's just say, let's go ahead and delete this side over here. So let's just say we see the market was in a decline. And we see that we have this last structural point here, which is our lower high. And let's say that the market decided to come and break this lower high and then give us what is called a retest. This move here, once it go past this part here, is known as a BOS, which is either a break of structure, or some people will call that, I'll make this a little, well, no, I'll keep it that big. They'll either call it a break of structure or they'll call it a choke, which is called a change of character. So when this point here happens, when you break your last structural point here, as you can see, the market came up and it broke this last lower high, which is changing the direction of the trend. That's either called a choke, a change of character, or a break of structure. Most people consider it as break of structure. And so when we have that, that's when the market is going to go bullish, like we talked about. Now, in that type of market, when we're bullish, let's say we have these higher highs and higher lows. Okay, let's say we have higher highs and higher lows, and we can see that the market is starting to go in an incline. Let's say the market is coming up here, and when the market breaks this last higher low point here, this area here is considered as our break of structure or our change of character, because now, because it's broken the structure from going from higher highs, oh, I'm sorry, this is supposed to be higher high. Because it's broken the structure from going from higher highs to higher lows, now it's broken the last higher low, and now we're back to a decline. Okay? So when we're looking at this, whenever you have market structure going up, we have higher highs and higher lows. And so when that last low is broken, that's what you get, a break of structure or change of character. When you're in a bearish market, when the last lower high is broken, that's where it changes and you get a break of structure or change of character from that direction as well. Okay, so now if we go to, let me delete all of this and I'll show you this. I'll show you how this works on an actual market. So if we bring our candlesticks back and we look at this, and I'll show you some other areas in how the banks can kind of fool you and things like that, and can actually continue in the same direction. So let's just say we have this chart here, and let's just say we started from this point here. You can see that within this chart, we have a lot of stuff going on in here. We have these peaks and valleys, and it's moving up and down and all of that kind of thing. So when you're looking at this, there's two types of structure that we got to understand. You have micro and you also have macro structure. When you're looking at macro structure, this is anything from a daily or a 4-hour time frame. That's what we usually like to say. 4-hour or daily time frame. When we're looking at microstructure, it's pretty much anything lower than a 4-hour time frame. Okay? So right now, as you can see, we're on the daily time frame. So if I click on this here, right now we're on the daily time frame. So each one of these candles, which means that each one of these candles take a day for it to close. So if we look at this, when we're looking at macro structure, we're looking at the big picture. And so I'm gonna go ahead and show you guys what the macro structure actually looks like with this. So let's just say we started from this top peak here. We're going down. Wait a minute. That's a lower low, lower high, lower low. The reason why this is a low here and not necessarily up in here, all of this is noise. This is micro up in this area. So we're looking at macro right now. And because it broke this last lower low here, we can see we've come down. And some would say, well, this is my next lower high here. But it wouldn't consider as a lower high because this point right here never broke the last low in this point here. Okay, so what we're looking at is this structural point here. This is our lower low, which gave us an impulse to this lower high here. Hold on, that looks extremely terrible. Hold on 1 second. Okay, so we'll be looking at this point here, which gave us our impulse leg to our lower low, because this structural point here gave us the impulse that broke this last structural point here. So we're, like I said, we're looking at macro, lower low, lower high, lower low, lower high. Now we come here, and some may say, hold on, wait a minute. No, actually, as I zoom in, let me take that one part off. As I zoom in on this, if I put a line here, we can see that this actually is lower. So this here is a lower low. I'm sorry, lower high, lower low. Now, here's where the market can trick you sometimes. Okay? The market can trick you to where it'll seem like it's a break of structure, but it'll still continue in the other direction. And what that's called is a liquidity capture, or the banks kind of taking stop losses or money and things like that. And what I mean by that is, we know and we understand this is our last structural lower high here, right? And we can see that the market has broke that. So just like we learned, that can be considered as a break of structure. However, because it's not a break of structure, it still continued in the same direction and broke this last low here. And I know that probably confuses some people, but we're still in a bearish market because, as you can see, let me remove all of this. It's looking rather junky right quick. All right, so we're still in bearish momentum because the market is still giving us bearish momentum. Look at this, it actually did get lower. It broke structure, however, it went back down. And as you can see, we're still continuing in a bearish market, okay? So when we're looking at this, this is the macro, this is the big picture, because we're on a daily time frame. Now, when we talked about micro, so let's just say we went to a 1 hour time frame. And as you can see, from a daily perspective, we still have these big old peaks and valleys. But if you notice, in between these peaks and valleys, we have smaller market structure. So right now we're on a 1 hour time frame, and we know within a day there's 24 hours. So if we looked at this, let's check this out, and I'll show you how the market actually changes from a bearish market to a bullish market within the microstructure. So if we look at this, we can say, and I'm gonna use a different color as well. I'll use blue for our lower structure. So let's just say we can see the market is bearish on these smaller structural points like this, okay? But you can see we had a break of structure, but it still continued in a bearish momentum, okay? But look at this. We had a break of structure in this area here now that actually changed the direction, and we'll call this our break of structure right here. It started to change the direction because you can see that we have lower lows and lower highs. However, when it gets to this point, we can see that the market is starting to produce higher highs and higher lows. Okay, we can see that the market is starting to produce that now. So that's one of the things that we want to be mindful within the market, is we want to understand, hey Ish, what's going on, man? So we want to understand when the market changes, that way we can know which direction that we're actually trading in. Okay, and so I go into more depth for those that are new. If you go to our channel, you will notice that I have some videos on market structure that'll help with that. I kind of go in depth with those, and I kind of let you know what's a pullback and all right, you guys, we had a few technical difficulties. It looked like my whole stream just cut off. See if I can restore this thing. Are you guys still there? Let me know if you guys are still there. Hey y'all, can y'all hear me? Want to make sure y'all can hear me. Please comment in the chat if y'all can hear me. I don't know what happened with the stream. My whole computer shut down. All right, y'all, we about to go ahead and get into some market analysis. Please let me know if y'all can still see me, if y'all can hear me, all of that good stuff. I don't know what the heck happened. Let me bring the chat back up, all of that good stuff. Hold on one second, y'all. Let me get this stream together. All right, y'all, let's get into some market analysis. So we got one request for GJ. So let's go ahead and get into it. All right, so let's go ahead and lock in right quick, y'all. Get some market analysis. So as we're looking at GJ, one of the things I like to do is I like to start off, whenever we mark up, I like to start off on the daily time frame just to kind of get a big picture of where the market is going. So I like to start off with macro structure. And so as we can see that the market is bullish as we're looking at this thing, okay? And so a couple points that I can notate right off the bat is, let's see. We can also see that we had a liquidity grab here. Price kind of shot down, which probably happened from some sort of news, took out these lows over here before it kind of continued in an upward momentum, all right? So one of the things I like to do is I like to mark my structural points from a daily perspective. That way I kind of understand exactly where I am and how the market is going to move a little bit. All right. So let's check this out. Let's see. Let's see if we started from here, from this point. Uh-oh. Mark my peaks and valleys. All right, we can see that the market broke this area here, but then it decided to jump back up over here. So what I'll probably do, because a lot of this information over here is going to be irrelevant since we're on a daily time frame. And so one of the things I'll probably only focus on is probably this area right here. And so with that, from a daily perspective, we'll look at these areas here. Not gonna go too far back because these are daily candles. And we're gonna focus on these points here, these structural points here. All right. So now, as we can see from this particular point, we were in bullish momentum. Okay. And then from there, we can see from a daily perspective, we had a break of structure in this area here. I'll put this on the bottom. All right, so this is changing the character of what we're looking at. Okay, and we can see right here we're getting some sort of pullback coming back into this daily area right here. So we're gonna actually just remove all of this. Just kind of play with what we have on these 2 points right here. All right. So as we can see within this area, we're gonna go ahead and throw our fibs on here. And what a Fibonacci tool is, it pretty much measures the retracements of a pullback or a swing. And so a lot of times what we like to look for is we're taking it from this top portion here, this top wick here, and this bottom wick here is where we have our 2 points. And so a lot of times we like to look for the market to pull back anywhere within this area here, which is pretty much 50% of our Fibonacci situation. And we can see that the market pulled back 50% and it started to decline and kind of push off. Okay. So with that, we can see a couple things. We can tell that we have a supply zone from a daily perspective right here. We have a daily supply. Move this to the right. All right. And let's drop down to the 4-hour time frame. Kind of look and see what we have down here in this area here. Okay. So from a 4-hour perspective, we can see clear as day, you know, the market, it was in an incline here. We had a break of structure on a 4-hour time frame here. Make this a little bigger. We had a break of structure in this area here on a 4-hour time frame. And we see that we got a retest that came back into the supply zone right here. Okay, before the market starts to dip down. Okay, what's really going on? GBP, JPY. All right, let's get back to this thing. Go back to the 4-hour. Okay. I don't know what's going on with my computer today, y'all. But as we can see, we got a break of structure and we got a pull back into this 4-hour supply here. And we can see that the market decides to dip off and decline in a bearish 4-hour trend. You know, as we can see, we can actually grab a trend line. We can see that the market is pretty much declining in this trend here. Okay. So now one of the things that we notice is we can actually mark up our structural points from a 4-hour perspective. That way we can get a clearer picture as to what we're looking at, what we're trading, all of that kind of thing. So I'll just call this the H4 because right now we're playing with the 4-hour time frame. Put this on top. Another 4-hour here. 4-hour structural here. And then we can also look at, put this on the bottom. That way it kind of let me know where my 4-hour structures are, all right, from a 4-hour perspective. Now let's drop to the 1 hour. And we'll probably be able to see it a lot clearer. As you can see, we got lower low, lower high, lower low, lower high. And so if we're looking at this market structure where we're at right now, we can possibly look at this as a huge supply zone here. We go to the 4-hour, we can see nothing on the 4-hour. But in this area here, we want to take this entire candle because this is the last up candle before the down move. And so we have imbalances and things like that. And so we want to make sure we cover the entire area. This is the H1. This is a 1-hour demand. Yeah. And so from this point, we can see this is a demand here that hasn't been mitigated yet. And what I mean by mitigated is price has not come back up here and closed out these orders and things like that. So if we take our Fibonacci tool and bring it down like so, we can see that from a 4-hour perspective, price has definitely come into our golden zone, which we like to see. And the reason why we like to see price come within our golden zone, because that gives us premium pricing, and that's what we want to take because it's in a bearish momentum. In this area is acceptable to take any sales. Okay, me personally, I think price might get a little higher, come up into this 1-hour area up in here, but we'll see what the market is going to give us. Okay, and so right now we can see we're pretty much in bearish momentum. So let's drop to a 15-minute and let's look at structure on a 15-minute to see if we had any break of structures from that perspective and see if the market is possibly going in a different direction. And so one of the things that we can see from a 15-minute perspective is that the market did indeed have a break of structure. And I'll show you what I mean. And so if we look at this point here, we can see we had bearish momentum here. Okay. And then the market gave us a huge impulse to this area here, giving us a 15-minute break of structure right in this area here. Okay. And so from there, we want to see a pullback right in this area before the market starts to continue in the upward trend. So from here, we can throw our Fibonacci tool from the bottom to the top. And we want to see price dip anywhere within this area, which it has. Okay, let me remove this right quick. We can see that price has dipped into this area right here. And so down in this area, we're looking for something for it to bounce off of. We're looking for a key level, a demand zone or anything like that. And so for me, just looking at this, I can tell that this area right here is a 15-minute demand. 15-minute demand, there we go. And I'm sorry, these are supposed to be supplies up here. I had the wrong thing. Supply. Okay. These are our demand zone here. I want to go to the 1 hour just to look and see. Okay, 15-minute. Yeah, I'll stick with that 15-minute just because we got this last down arrow here. So I want to cover this entire area. So we can, like I said, we can see the price broke structure. It came back, and price, I'm looking for price to possibly continue to the upside and possibly come into this 1 hour supply zone. So before we want to look at any entries or anything like that, we can see, even though it broke structure, from this leg of structure here, we're still in downward momentum. Because if we look at this, we can see that we still have lower low, lower high, lower low, lower high, lower low. Let's drop to a 5-minute to get a clearer picture. And now we can really see the peaks and valleys, so to speak. And so that's why I said I still think that the market is going to go a little bit lower. I want to see it possibly dip into this 15-minute demand zone. It's supposed to be 15. There we go. I want to see it dip into this 15-minute demand zone and then possibly go up. And so let's see. Let's drop to a 1 minute just to look at structure as well. So from a 1 minute perspective, we can see that we indeed did have a break of structure on the 1 minute, because if we look at this, lower low, lower high, lower low, break of structure right here. Here's our retest. And so we can see that the market is starting to continue in an upward direction. However, I still want to be a little bit patient though. I want to kind of wait for the 15-minute time frame, because that'll give me more of a confirmation. Like I said, I still think the market is going to go down a little lower, but if it decides to continue to the upside, we want to see it break structure here first, which this is right around 165, 295. So if price breaks this, give us a retest, then we can say, okay, hey, I want to look to start taking buys up to this area here. But right now, like I said, I still think it's going to come a little lower, so I don't want to really look to hop in nothing too prematurely or anything like that. So we want to look for it to kind of come down to this area here. And what we can do, we can set an alert right here at 164,800. So we'll say GJ approaching M15 demand. That's what we'll say. And when I say M15, for those who don't know, that's the 15-minute time frame. I'm just saying it backwards, M15 and things like that. Okay. So that's pretty much what we're looking for. And then we can also put an alert right here on this 15-minute break of structure, GJ 15-minute BOS. So that's pretty much what we want to do. We want to wait for either price to break structure, give us a retest, and then continue, or come down to this area. So here are some of the patterns that we want to see. So let's just say price come down here, does something like this. So we want to see a break of structure, retest, and then continuation. Okay. So if it does something like this, this will be our break of structure point here that we'll be looking for. That's what we'll be looking for, break of structure in this area here. However, you know, it could happen here. You know, we could see something like this come back and then continue up to that side there. So we'll set an alert to see if it does do that. And like I said, me personally, I would like to see it get a little lower. That way, you know, our protected low can be our stop loss. We can minimize our risk as far as our stop loss. So for example, if it comes lower, then, you know, we have this low here that we can say, okay, this is the protected low before it kind of goes a little lower. But we can actually look to set our stop losses up under this 15-minute demand zone. So like I said, I want to see it dip into this demand zone before it give us any break of structure to go the other direction. Okay. So that's pretty much what I see on GJ. So if we kind of back out of this thing and kind of look at this holistically, market structure on GJ right now looks really, really good. Really good. And so we also have, oh, I don't want to miss this either. So from a 1 hour perspective, we have a supply zone here as well. This is a 1 hour supply zone. Take this Fibonacci tool off. I'm gonna take this off because we understand and know exactly what we're, I'll keep that one back on there. But that's pretty much what we're looking at. We have a demand zone here that I don't think necessarily that it'll break. So as I'm looking at this, you know what? This point here, let me actually remove this. The reason why I'm removing this here is because this is not a confirmed lower lower high just yet until this is broken. So right now, this is fair game where price can actually come down here, do all of this, play anywhere up in here, and actually still come down. Because right now, this structural point here, this is our protected high. And I'll change the name of this. This is our protected high. So until price breaks this, from a macro perspective or 4-hour perspective, we're still gonna continue to be bearish. But within this, this 4-hour situation, we can remove this and say price can play anywhere up in here and possibly come back up to this 1-hour supply zone and continue back. So like I said, I want to see it dip down in this area first, possibly come up in here, maybe tap this, or possibly break that and come up here and then continue to the downside. Okay, so that's what I see on GJ. Let me know if y'all have any questions about GJ, but it's super simple how this market structure is playing out currently right now. From a 4-hour perspective, like we said, we're bearish, and so I feel like that it's going to continue to be bearish, but I think within smaller time frames, I think it'll come up, tap this demand zone, and continue to the downside. Okay, so this is what I think price action might do something like that. Okay, put my 4-hour Fibonacci tool back on here. And that's what I think the market might do. And so these alerts that I set here, I'll put those in our chat. That way we'll have those alerts and things like that. Okay. Hey, if you have any more pairs, put them in the chat and I'll be happy to mark them up. Right now, I'm gonna move on to some other pairs. Let's look at EU. Let's look at EU, Euro, USD. Okay. And so, like I said, we're gonna follow the same format. We do the same thing over and over again. That way we can make ourselves consistent in how we see the market. Don't change up too much stuff. When you have a strategy, stick to it. That way you won't be deviating from your strategy, and that allow you to make too many mistakes. Okay. So as we can see from a from a daily perspective, we can see, let's start from this point here. We can see that we're in a decline. Let's see, is this lower? Yep. Lower high, lower low, lower high, lower low. And here's our breakup structure right here. All of this right here was noise, okay? So we can see from a daily perspective, we had a daily breakup structure right here, okay? But all of this right here was breakup structures and change of characters on a smaller time frame. But we're looking at the daily right now just to kind of see exactly what the market is doing, okay? But we can still see that in this area here, we're still in upward momentum in these areas, okay? But we know, one of the things that we know, because we got this breakup structure, at some point, the market has to come back somewhere in this area before it continues in an upward momentum. Has to come back and confirm this breakup structure, okay? So one of the things that we want to see is for price, and I don't know if this is the turning point here, but we want to see price possibly come back somewhere within this golden area in here, okay? That's what we want to see. And so when we look at that, there are a couple of demand areas that we can see that hasn't been mitigated. We have these long imbalances here for unfulfilled orders up in here, but we have a couple of daily demand zones. We have a daily here. And we also got a daily demand zone right here, okay? And so at any given point when price decides to come back, these are the two prime areas that I'm looking for price to come tap into before it continues in an upward direction. Okay. And so when that happens, one of the things I can see is if we look at this area right here, because you want to make sure you look at the whole market as a whole. This is the $1 mark. This here is, let me make this black. So this area here, this is in parity with the US dollar. So like I said, price hasn't been down here in a while, and you can see when it broke this area, it played down here for quite some time. And so before it actually continues to really actually leave this area, it's gonna have to come back and retest this area. And so for me, I don't know if the market will come all the way down to this area, but one of the things I do see it doing is come back and retesting this key level, probably somewhere within its demand zone before it continues to the upside. Okay, but let's drop to the 4-hour to kind of see exactly what we can look for from that perspective. Okay, so if we're on EU ish, you want to see Bitcoin? Okay, I'll mark up Bitcoin next. All right, so if we're looking at this from a 4-hour perspective, let's go ahead and get our H4 structural points. Definitely confirm that one, and this one possibly is going to go higher. Possibly we can see where the market is stopped. So these are H4 points here. H4, 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 H4. Okay, now these are structural points because for those who are new, like I said, higher high, higher low, higher high, higher low, possibly. Okay, now when we're looking at this, let's look at possible areas that the market can actually take us to and things like that. Well, market structure is not that clean here, so let's look at something else. Let's go to the 1 hour. Okay, we can see there's a lot of choppiness, there's a lot of noise, there's just all type of stuff going on within the market right now. And so let me move this to the bottom here. So one of the things that we kind of sort of want to see, we can see that the market, you know, it's kind of choppy, so we can't really tell exactly what it's all doing up in here. So when the market is choppy like this, we want to kind of drop to a smaller time frame. So now this is a 15-minute time frame, and we can see some peaks and valleys. We can't see everything, but we can see more than we could on the 4 hour and the 1 hour. And what I mean by that is, if we look at these, higher high, higher low, higher high, higher low. This point here is a higher high, higher low, equal highs in this area here. Let's check it out. These are equal highs in this area right here. So when we look at this, we actually had a break of structure on EU right here. 15-minute break of structure. Price broke down, came all the way back to retest this area here, this demand zone right in this area right here. Price is just sitting in it, playing in it. Oh, I'm sorry, supply zone, not demand zone. Playing in this supply zone right here. Okay, now it could break through here and continue to the upside. Definitely can do that. You know what I'm saying? Because from a 4-hour perspective, we're still bullish. You know, it possibly can break through. But from a smaller time frame, we did have a break of structure. We did have a break of structure and a retest. So one of the things this could symbolize is that the market possibly is turning around. But one of the things we also want to be mindful of as well is it can easily break through this and continue to the upside before it turns around. So we just want to see what it's going to do. We don't want to jump into this any prematurely or anything like that, because the market is not as clear as we would like it to be. And so right now, from this leg of structure right here, we can see that we're still bullish. And so with that, we can drop to smaller time frames to see what the picture will look like on a smaller time frame, to give us hints what it's going to do on a bigger time frame. So what we can see is we're on a 5 minute right now, and we can clearly see we have higher high, higher low, higher high, higher low, higher high. Okay, we can see that, and we can see, well, even so, let's drop to a 1 minute, because we'll be able to actually see even more. So we can see from a 1 minute perspective, higher high, higher low, higher high, higher low. And this is high. That's our last high, because we can tell that it's higher than this point. So if I put a horizontal right here, you can see that this is our last higher high. So right now, for us to get a break of structure and get some clues as the market turning around, if this point breaks here, if we get a break in this area here, this will be considered as a 1 minute break of structure. If it breaks here, if it gives us a pattern like so, break, come back and retest, then we can possibly say, okay, the market is possibly turning around, and with something like that, we can possibly take a short entry somewhere up in here, stop loss right above this area here, and possibly ride this down all the way. All right, y'all. I don't know what's going on with my computer, but I'm getting ready to cut this one a little short. I guess I got to do some updates. This is the second time my computer crashed, so I guess I'm gonna have to do something with this thing. I apologize, but this thing is really tripping in today. Yeah, this thing is giving me the blues, y'all. So here's what we'll do. We're gonna go ahead and continue this on our next session. And like I said, I apologize for the technical difficulties with this computer. But hey, I'm gonna make sure I put this up in the chat. I'm gonna do some analysis on some other pairs as well. While I'm here, you know what? I'm gonna go ahead and see if I can actually mark up BTC right quick though, because I know that that's one of the pairs that one of our subscribers, Ish, he requested that one, so I want to make sure that I can put that in. So I'm gonna go ahead and try to mark that one up right quick. All right. And if you're still on, I'm gonna go ahead and do BTC right quick before we hop off. Go ahead and do Bitcoin. I'm gonna mark up Bitcoin right quick. I haven't marked up Bitcoin in a while, so let's take a look at this thing. I'm gonna go ahead and hold on, BTC USD. I'll go to this one right now. Okay. All right. Now, crypto is really, really different. So I'm gonna go ahead and mark up this BTC right quick to make sure that we get this marked up for you, man. So as we can see with BTC, from a daily perspective, this thing has been bearish for a minute. We can see that back in November of last year, about a year ago or so, this thing was dang near 70,000. And now we're all the way down to like 17,000. So Bitcoin had a major supercalifragilisticexpialidocious drop. So let's go ahead and get into it. All right. So as we can see, we got these peaks and valleys on this daily, and it's bearish. Like I said, it's been bearish for a minute. and we can see that that's pretty much the trend. So let's go to a 4-hour and kind of look at this thing. All right, and right now Bitcoin is consolidating a little bit right up in this area, and so it's nasty a little bit. Let's see something. All right, and you know what? That's a sign that computer just ain't liking me right now. I'm gonna have to do some updates or something like that. Hey Ish, man, I apologize, man. Let me go ahead and do some updates, and I'll mark this up and put it within the chat, within our Discord chat. And so, hey, you guys, I appreciate you rocking with me. Like I said, I apologize for the technical difficulties, but I'll get back on this thing next Sunday. And next Sunday, we're gonna actually be streaming on Facebook as well. So we're gonna be streaming on YouTube and Facebook at the same time. Okay. Hey, you guys, I appreciate you rocking with me, and I'll see y'all on the next stream.